With so much volatility and change that seems to happen on a daily basis, sometimes the best course of action is actually to do nothing. If you were to pull your money from the stock market, you may potentially miss those up days of 3.5% or more, and history tells us that that's often a losing strategy. Time in the market has historically always beat timing the market. This is why it's so important to set up your portfolio within your risk tolerance. Here at A Better Way Financial, we build portfolios to navigate during the more volatile times, but also we set it up so that it's prosperous during the good times. You don't want to take on too much risk, especially once you're in your retirement years. Now, with the stock market down, some of you may want to consider even using this as a buying opportunity. It all depends if this is within your risk tolerance. What I potentially mean by that is either adding additional cash into a brokerage account or saving into a Roth IRA or traditional IRA for your contributions, or for some of our retirees, it may mean taking a 10% free withdrawal, as long as you have a plan set up for the long term. With so much headline news, it can feel a little nauseating. Are we done? Are we taking steps to be completed with the conflict? Are we escalating the conflict? Sometimes many of our leaders will say that we're trying to come with a peace deal. However, we're sending more troops over to the Middle East. That's why it's so important, again, sometimes to just do nothing and set up your portfolio for the long term. Not only do you want to look through the recent oil shock, but also come up with a game plan for how to get money out of your portfolio in the short term. Many of you may listen to Fox Business News or CNBC, and many of you may have heard of this investor before. His name is Jim Cramer. Mad Money, buy, sell, and all the different funny noises, right? But his whole shtick is essentially trying to invest in good companies at a fair price and beat the stock market. But I also find it interesting that just last week on an episode of Mad Money, he actually said right now some annuities can feel like they're as easy as shooting fish in a barrel, right? Adding that additional protection in there. And on some level, he's correct. But I wish he was a little more specific with the types of annuities that he was mentioning, right? Because some annuities will provide that downside protection, whether that be a fixed index strategy or a fixed strategy. However, if you were listening to that and you may have heard, have a variable annuity or something of that nature and thought, well, maybe I do have protection in that may be a little misleading, right? Just because you have the 10% buffer doesn't mean you have a full downside protection, as some investors have seen thus far this year. Since the stock market at one point, the NASDAQ was down more than 10%, and so was the Dow Jones. It all ties into our subject today. Are you within your risk tolerance? Just because the stock market goes down 7 to 10% doesn't necessarily mean your portfolio is down that much, right? It's so key, especially when you're in your retirement years, to set your portfolio up for a position that you're comfortable in, right? If you're not more comfortable going down more than 15%, even in a 2008 scenario, then you're more of a conservative investor, and your portfolio should be established as such. If you're willing to take on more risk and you're more of an aggressive investor, well, maybe you want to put your portfolio in a position where 70% of your funds are in the market and 30% are in safety, right? There is no one size fits all. That's why it's so important to meet with your financial planners here at A Better Way Financial on a consistent basis. So if you're interested in learning how we help our clients reduce risk in their portfolio here at A Better Way Financial, click on the link in the description below or visit abetterwayfinancial.com. Thank you for joining me today.